How's it going, everybody? It's Stas here. Welcome back to another video. So in today's video, I'm going to be sharing with you all and breaking down the top couple of stocks and ETFs that I'm personally watching and looking to trade right now, heading into the final week of January in 2020. And I kind of just want to break down my plan heading into this week. Due to the stock market futures, guys, they took a massive dump here. The S&P is down about 1%, NASDAQ's down about 1.2%. The Dow Jones is down about 1%, so I want to share with you all what can you trade when the market is going down. There's a couple of different ETNs, ETFs that I'm personally watching here that do well whenever the market's going down, and I want to share those with you guys in this video and just go over very quickly what the S&P 500 did over the past 5 days of trading, which is the chart that I have pulled up right here. So if you guys enjoy the video, before we do get into it, all I ask from you is to simply go down below for me and hit that like button, and also consider subscribing to the channel if you want to be further connected with our community and you want to see further content from me. And feel free to go down below and claim your 2 free stocks, guys. Yes, you heard it right, 2 free stocks from Webull valued up to $1,400 with a deposit of $100 into the account, and that affiliate link is down below in the description box. So without further ado, let's just talk about what the markets did in terms of the S&P over these past 5 days of trading. So this is the chart we're looking at, the 5-day, 5-minute chart. We can see on the 17th, the 21st, the 22nd, it was pretty much consolidation on the S&P 500, holding around 33.20 and really topping off at around 33.40. So trading within this 20-point range. Then you guys can see on the 23rd, that's where we started to see some downside pressure. We actually broke 33.20, bottomed out at around 3300, double bottom here, and then we rallied on for the rest of the day. And here is where kind of some panic selling. It's not as crazy of a decline as we've seen, let's say, in the past. If you guys were a part of the market in October to December of 2018, we were seeing stuff like this all the time. And honestly, the way that the price action was looking on Friday, sure, it wasn't as bad as some times that I've seen in my experience in the stock market, but it did remind me of some panic-y selling. I mean, you can see the S&P went from 33.30 down to about 32.80, and that's a 50-point drop in the span of a day. That's pretty worrisome, right? Now, if we're flipping over here to the futures, it gets even uglier because we're down another 1.07% on top of that 0.9% that we just saw that we were down this past Friday, which is insane, guys. And we can see, and let me share with you guys kind of what's causing this, but you guys probably know it's the coronavirus over in China. This is spreading. We have 50 lives that have been claimed, 50 deaths, I believe, in the Chinese city of Wuhan, and it's infected more than 2,000 Chinese citizens with a pneumonia-like illness, according to the China's National Health Commission. And guys, it's getting out of China now. It's getting quite scary, actually. I believe from my research, there's 5 cases of people in the United States having this virus. I'm not sure if these 5 people have died, but there's 5 known cases right now in the United States. And on Friday, actually, French authorities confirmed 3 cases inside the country. The first known cases in Europe, and Australia announced it's 4. So this is spreading. Europe, North America, Australia, right? This is not too good, guys, and that's kind of why over in China, like I mentioned in Friday's video, they're kind of containing everything. They've closed down that city. I believe it's called Wuhan. I believe it's part of Hubei, H-U-B-E-I, if I'm not mistaken, and they've closed down Shanghai Disney. They're really just trying to keep this virus, at bay at that, right? And it seems like, again, it's pushing out into Europe, North America, which is causing a lot of tension and a lot of kind of people are getting scared. That's kind of the way I'm seeing it. People are getting scared, and honestly, I don't know how this directly affects the stock market, to be completely honest with you guys, but it seems like it is, right? It seems like people are selling out, which is why we're seeing some panic selling, which is why we're seeing this drop, right? The ES, again, down about 1.02% right now. The NASDAQ down 1.4%, guys. This is insanity, right? And the Dow Jones, if we take a look, is down 300 points in terms of the futures. So take a look at this. Remember on Friday, I told you guys a pullback is necessary here. We haven't gone, it's been a while at this point. It's been at least a month since we've had a significant pull down of more than 1-2%. And now it seems like we're getting that, right, with today's future pull down. And it seems like on the 4-hour chart, the 6-month chart, the Dow Jones, the NASDAQ, and the S&P 500, they're all holding that 180 SMA, which is a level that we've been talking about here on the channel. So that's kind of where I'd watch for the markets to hold on a technical level. And if they do, guys, there could be a lot of money to be made on the rebound here, because many stocks, if this holds into tomorrow, guys, many stocks are going to open up red. It's going to be one of those days where pretty much everything is red, but there are going to be a couple names that are green. That's how it works. Maybe Nflx, maybe Chipotle, maybe McDonald's, who knows? Nobody knows. But a lot of the time when the markets get crushed, there are a couple names out there that are somehow green. And it seems like during the 2018 sell-off, if you guys remember that, I believe Tesla was one of those stocks that just kept on going. It just kept on going. You guys can see here the NASDAQ holding that 180 SMA as well, like the Dow Jones, and the ES, the E-mini S&P futures, holding that 180 SMA. So let me tell you guys what I am planning on doing here, how I'm looking to trade this. So from the downside perspective, I'm not sure how much more downside we can get here on the markets, right? Sure, if we break this 180 SMA, maybe we get some more scary news revolving this, virus over in China that's spreading, and maybe that causes some short-term fear that breaks us below here. That could open up an opportunity in these ETFs that I talk about from time to time on my channel. SPXL and SPXS. Most importantly, SPXS, because this is one that goes up whenever the S&P 500 is selling off. So expect this one to be up a good amount tomorrow, guys. It was up 2.8% on Friday, and this is a 3x leveraged ETF. So it is a bit more risky. The returns you can get are quite higher, but if the S&P does dump, we do see some more correction there, more of a pull down. This could be a nice play, but the way I'm seeing it now is it might be too late to play the downside due to us already having sold off a good amount, right? We're already down about 2.5%. So now the way I'm looking at this is maybe a bounce back play, maybe back to all-time highs in the short term here. Maybe not in the short term because of the virus, but maybe if it blows over in the next week, which it probably won't, but let's say the market just somehow bounces back, right? SPXL is one that I'm leaning more towards right now, which is the inverse to SPXS. SPXL goes up with the S&P 500, right? So expect this one to go down to, I'd say, maybe 68-ish, 68.50 tomorrow. And that could open up a nice dip buy if you believe these markets are going to continue to roar. And this is just a short-term hiccup in these markets. This could be a very good play for you. And let's say you don't want to trade something based on the S&P 500. Maybe you can trade something based on the NASDAQ. Well, you can do that as well, guys. And I can share you guys one ETF that I am probably going to be purchasing sometime this week. And it's going to be TQQQ. And this is the same thing as SPXL, but it tracks the NASDAQ. That's the only difference here. And it goes up 3 times whatever the NASDAQ is going up. And with the NASDAQ being down 1.5% right now in terms of the futures, this might be down, let's do the math on that, 1.5 times 3, it may be down 4 to 5%. If the NASDAQ does end up going into the session tomorrow, holding the level that it's at right now. And guys, that could be a tremendous dip buy. You have to think about that. If you're long on these markets, if you think these markets will continue to push up, this is a short-term hiccup, you can pick up TQQQ maybe at around $95. And the thing here is, if you're into playing earnings, which I personally don't, but why not mention it in this video? You have to realize a lot of big tech names are reporting this week, which is what we'll talk about here in a couple minutes, that could very well fluctuate the whole NASDAQ higher if these earnings are good and if these individual stocks do well. And what will that do? Well, that will push up this 3X leverage ETF, ticker symbol TQQQ, and that's where us traders, we could potentially take advantage of that. And some of the big tech names this week are Facebook, Apple, let me double check, Amazon. I don't even think Amazon's reporting this week. That they're on the 30th. Is that this week? Yeah, that might be on Thursday, Wednesday, or Thursday, or Friday, one of those days. So Amazon, Facebook, Apple, right? Microsoft. Let's see when they're reporting. Microsoft's reporting, let's take a look here, on the 29th. So this is a massive, massive week for the entire market, and especially for tech, guys, and especially for the NASDAQ. So keep an eye on all of those different stocks. And some other things, ETFs and ETNs that I trade when the markets are rocky are TVIX, ticker symbol TVIX. And warning, guys, this is a very risky thing to trade. It's a very risky instrument to trade because it's very volatile. It actually follows the VIX, right? It trades on the VIX, which is why the ticker symbol is TVIX. And the VIX, for those of you guys that don't know, it goes up whenever there's volatility in the market, and a lot of people view the VIX and call it the fear index. So when there's a lot of fear in the market, the VIX is spiking up aggressively, which in turn, when the markets go down, fear, volatility, that will end up spiking up again, TVIX, which does go up very quickly, guys. Believe it or not, this goes up very quickly when there's a lot of fear in the market. And if you guys recall, and you can see it on the chart here, this day in particular, TVIX went up 40-50% in a day. And I'm sure many of you remember that, especially if you've been following the channel for a while, because we were talking about it heavily back over the summer, or at least the USA summer here. I know Australia's summer is a bit different, but I don't know if any Australian viewers watching this channel. If so, drop a comment down below. I'd love to know. But yeah, that was a massive move, watching TVIX. And another one that I'm watching here is going to be gold, guys. Gold goes up when there's fear in the market. People are flooding into gold when they don't trust equities, bonds, cash. They're fearing the economy. What do? They put their money into a hedge, and the hedge here is gold. And gold's already up $7 right now in terms of the futures, up 0.47%. And it seems like we're actually pulling down a bit here. If we take a look at the 5-day, 5-minute, we were up all the way to almost 1590. Now we're pulling down, which could maybe open up an entry point tomorrow if these markets continue to be rocky. And what I'm looking to trade here is going to be JNUG, guys. Ticker symbol JNUG. And this is an ETF, another one of those leveraged ETFs that goes up 3 times whatever GDX goes up. And GDX, all that is a gold ETF that tracks gold. So pretty much whenever gold's going up, GDX is going up, and then in turn, JNUG is going up 3x whatever GDX goes up. So watch the potential big move here in GDX. It does have some room. If you guys see here on the chart, maybe up to about, let's say, $30. That's a very, very possible move, in my opinion, over these next couple of days. And quite honestly, I'm bullish on gold either way, honestly. So this move should be made. I'm honestly bullish on gold, being completely honest with you guys. So I can see this happening this week. And really, due to the pull down we've seen, this is due for a recovery, and it's already recovering, on a technical basis, what we're seeing here on the 4-hour chart. And to throw another one in, why not? GLD, this is an ETF, another gold ETF that I own in my M1 portfolio, and I view this more as a long-term holding, kind of to have a bit of exposure to gold in some of my, stock market accounts. So those are a couple of different ETNs, ETFs, and strategies that I'm looking to implement this week if the markets are rocky. And notice, I haven't really talked about too many stocks, guys, because the truth is, when markets are rocky like this, volatile, I like staying on a nice pile of cash. And thankfully, I took some profits this past week that if I didn't, I'd be regretting it now because the markets, again, we're seeing are down a lot. So this is one reason, again, little side note, side tangent here, to lock in profits even if you're up a couple percentage points, because you never know what's going to happen. Let's say, I was still holding, for example, maybe Beyond Meat or something. Let's say I was still holding, hoping that it was going to go higher, and I didn't lock in those gains. Well, tomorrow, most likely, guys, Beyond Meat's going to open up down a couple percentage points, which would have sucked. Let's be honest. That would suck, because now I would have to waited, more time for it to recover, for it to bounce back, and for me to get that profit that I could have just taken a couple days ago, waited out, been more patient, and then waited for a re-entry. That's why, again, I love locking in profits, because you never know when the market is going to see a dump like it's seeing right now. So a couple more stocks that I want to talk about in today's video, guys. Let me pull up my notes pad really quickly, or my notes app rather, here on the phone. So we talked about Facebook, we talked about Apple. The interesting thing about Facebook here is people are selling out, it seems like, before the earnings report. So what is that telling me? Maybe investors, they don't think Facebook is going to do too well. Maybe they're just selling to lock in profits before the earnings report. But either way, I want to see if we end up bouncing and just breaking back above 220 after the earnings report. And for Apple, we're actually not seeing any profit taking right now. We're still holding strong, and it seems like, based on a technical basis, maybe investors and traders are riding this one out through earnings. Due to me, I think I saw the earnings for Apple are supposed to be pretty solid, and especially if they beat, obviously, there's a high likelihood that there could be some a big move to the upside here on Apple. So the next one I want to talk about is Netflix, ticker symbol Nflx, and this is another one that I'm thankful I locked in profits on, right? Because most likely tomorrow, this will be down. And I hope it goes down maybe to 340. This is where I'm looking to add money into Netflix, $340 towards the support of this channel, and from there I'd love to ride it back up to around 360. There's a potential for profit there of around 5 to 6%. Now let's talk about natural gas very quickly. /NGG20. These are the natural gas futures for February. We're seeing a pretty big pop here, up 4% right now, up 7 cents, meaning UGAZ, ticker symbol UGAZ, will be up tomorrow if these futures hold, due to it going up whenever natural gas is going up at a 3x rate. So definitely worth watching natural gas here. And if you're a bear, if you are a natural gas bear, this could be a perfect setup for you to maybe short the rally, because we saw in yesterday's video, Saturday's video, that is, the natural gas breakdown of the report and some weather models, some upcoming weather being mild that we're seeing coming up. This could maybe be a point in time where we may be dumping even further, right? Because of the warm weather that is coming up here in the short term, up until February 7th, I believe, last time I saw the weather model. And if you guys want to see that video, go check out yesterday's video. I go more in depth about natural gas, UGAS, and DGAS. But on a technical basis, if natural gas breaks $2, we might fill up to 209, 210 if we break that 180 SMA. That could be a nice move here to the upside, where we could end up playing, again, UGAS, which goes up whenever natural gas is going up. So let me take a look. What else do I have here? SQ is another one, guys, and this is actually one that I entered in on, I believe it was Friday, and I was already down a little bit on the position, I believe, heading into Friday's close. And with the markets not looking too hot here, guys, yeah, I might be a bit red on this position tomorrow, but that's okay, because this is the point in terms of my strategy, at least when it comes to swing trading. The point for me is to buy a little bit at a time, little chunks to really risk manage against stuff like this where the market futures dump. I don't like going in all in at once because if something bad happens, markets dump, the stock itself dumps, I lose a lot more money up front than, let's say, if I were to put a little bit at first and then add a little bit more as the trend were to continue, or if the trend were to maybe reverse to the downside, I could just cut my losses, right? So SQ, that is definitely one that I like at this point. I'm bullish on the fintech space in general, and I think $70 to about $74, $75, that is very doable here for ticker symbol SQ. So overall, guys, a bit of a shorter video today, but that's really it. Kind of my plans heading into this upcoming week and just some stocks and ETFs that I'm watching right now. Focusing heavily on gold, focusing heavily on those market ETFs that I mentioned. I really think if these markets bounce back, there's a lot of potential in TQQQ and SPXL. And we talked about some tech stocks that are reporting earnings that are definitely worth watching here. So that's it, guys. If you enjoyed it, simply go down below for me and hit that like button, and also consider subscribing to the channel if you haven't done so already and you want to see further content from me. And don't forget, again, to claim your 2 free stocks from Webull, valued up to $1,400 with a deposit of $100, and that affiliate link is down below in the description box. And I really do appreciate you guys if you do use that, as you are supporting me directly, the channel directly, and all of the free work and free content that I'm putting up here for you guys on YouTube. So I hope you all had a fantastic weekend. I'll catch you all in the next video. Thanks again for watching. Thanks for the support. As always, peace out.